Believe it or not, the wealthiest people in the world have life insurance. Why? Because dying for free is the biggest mistake you could ever make. I'm Ayo Noble, and in this video, I'll show you how life insurance transformed my colleague's life with a 126k inheritance, while my family struggled with funeral costs when my dad passed away. This complete guide will reveal everything you need to know about life insurance in the UK for 2025. So that includes what it is, who needs it, how much it costs, and most importantly, how to use it to create generational wealth. When I was 16, my dad passed away unexpectedly right before my final exams. Not only did we face the emotional devastation, but overnight, my mum had to handle funeral costs and raise 3 kids on a single income. Now, fast forward a few years, I'm working in recruitment when one day a quiet colleague walks in, absolutely buzzing, and he tells me he's buying his first property at just 21. When I asked him how, he explained that his grandfather had passed away 2 weeks ago with a life insurance policy worth £500,000, and his parents decided to give him 126,000 of that as an early inheritance. That moment hit me like a ton of bricks, because the only difference between my family situation and his was a direct debit. In other words, life insurance. In this video, I'll cover what life insurance is and the different types, who needs life insurance and who doesn't, how much coverage you need and for how long, how to get the best rates possible, and how to use life insurance to build generational wealth. But first, let me address the biggest misconception. Life insurance isn't just for the wealthy. It's actually more important if you're not wealthy, and I'll explain exactly why. Life insurance is simply an agreement between you and your insurance provider saying, as long as you pay your monthly premiums on time and you pass away within the term time, your family will receive the agreed lump sum tax-free. Now, there are 2 main types of life insurance in the UK. Number 1 is term life insurance. This covers you for a specific period, 20, 30, 40 years, whatever you choose. It's significantly cheaper, but if you live beyond the term, there is no payout. Now, everyone that chooses me as their advisor will have the opportunity to cover themselves to the age of 90, as this gives them a great opportunity to leave an inheritance for their family without breaking the bank. Furthermore, life expectancy in the UK as of 2025 is 81 years old on average, although it is 83 for women and 79 for men. So, it is better to have coverage to the age of 90 rather than 70, because it's likely that you will outlive your policy. And like I said earlier, if you live beyond the term, there is no payout. So if you ask me, this is what most people should get, and I'll explain why in a minute. The second option is whole of life insurance. So this covers you for your entire life and is guaranteed to pay out whenever you die. Sounds great, right? So what's the catch? Well, it's typically 5 to 10 times more expensive than term life insurance. Both types have specific exclusions you need to watch out for. For example, things like death from alcohol or drug abuse, suicide within the first year or 2 of the policy, and sometimes high-risk activities. Now, you might also hear about critical illness cover, which is often talked about alongside life insurance. This pays out if you're diagnosed with a specific serious illness. It's definitely worth considering. Let me be straight with you. Everyone over the age of 18 needs life insurance. But if any of these 3 situations apply to you, you absolutely should consider it. Number 1, you have a mortgage. If you've got a mortgage and you pass away, who's going to pay for it? Your death could lead your family to becoming homeless just because you haven't got the right protection in place. Secondly, you have dependents. If you've got children or anyone else that relies on your income, what happens to them when you're gone? Number 3, you're the main breadwinner. If your income is significantly higher than your partner's, how will they maintain their lifestyle without you? If none of these apply to you, so maybe you're single with no dependents and no mortgage, then you might say that life insurance is not necessary right now. But here's something most advisors won't tell you. The younger and the healthier you are when you take out life insurance, the cheaper it will be for your entire life. So even if you don't need it right now, if you plan to have a family or buy property in the future, getting life insurance early could save you thousands. I've seen clients who waited until their 40s pay 3 times the amount they would have paid had they started in their 20s for the exact same coverage. This is where most people get it wrong. The banks will tell you that you just need enough to cover your mortgage. That's nonsense. Here's how to calculate how much life insurance you actually need. Step 1, add up your total debts. That could be your mortgage, loans, as well as credit card debts. Step 2, calculate how much your family would need annually to maintain their lifestyle. Step 3, multiply that annual amount by how many years you want to provide for them. Step 4, add funeral costs. Average funeral cost is about 10 to 20k in the UK. And step 5, add any specific legacy amounts that you want to leave. So let me give you a real example. So that could easily be a mortgage at 300,000, your family needs 40,000 pounds per year for 20 years. So that's 800,000. Funeral costs, let's call it 10,000. And the legacy fund for children's education, let's call that 100,000. So the total needed already is 1.21 million. Now that might sound a lot, but for a healthy 25 to 30-year-old, that could cost as little as 40 to 70 pounds a month. That's less than what most people spend on takeaways. As for how long you need the coverage, I would recommend the following. Number one, your mortgage for the length of your mortgage term, and for everything else, for as long as possible. So ideally up to your 90th birthday or for the rest of your life. Because as you know, you're going to pass away at some point. So you want to make sure that your family receives an inheritance at that point. And remember, the longer the term, the more expensive it will be. But locking in a low rate the younger you are will always be well worth it. So how do we get the best rates? Life insurance premiums are based on several factors, including your age, your health, whether you smoke, your family medical history, your occupation, your hobbies if they're high risk, how much coverage you want, and how long you want it for. Here are my top tips for getting the best rates. Number one, start young. Every year you wait, your premiums increase. Number two, use an independent advisor. Never buy directly from your bank or mortgage provider. They typically only offer one product and often charge more. An independent advisor who has access to the whole market can search the whole market for you and get you the best offer available quickly. Number three, be 100% honest. If you lie or withhold any information on the application, the insurance company can refuse to pay out. It's not worth the risk. Number four, review your policy regularly. As your circumstances change, your insurance needs might too. So review your policy every 3 to 5 years. Now, this is where it gets interesting. Life insurance isn't just about protection, but it can be a very powerful wealth building tool. Let me introduce you to a strategy called buy, borrow, die that wealthy families have been using for generations. Step one is buy. This is where you purchase assets like property that appreciate over time. Step two, borrow. Instead of selling these assets and paying capital gains tax, you borrow against them for cash flow. Step three, die. When you pass away, your life insurance pays off the loans and your heirs inherit the assets tax-free. Here's a practical example. You buy a property for 400 grand. So let's say 100K deposit and a 300K mortgage. Over 25 years, you pay off the mortgage and the property value doubles to 800K. Instead of selling it and paying capital gains tax, you borrow 600K against it. You use that money however you want. That could be investments, retirement income, etc. You then take out a 600K life insurance policy. When you pass away, the life insurance pays off the loan and your children inherit that 800K property tax-free. They can then repeat the cycle, turning that 800K into millions over multiple generations. This is how wealthy families maintain and grow their wealth over many generations. It all starts with life insurance. Right. Let me address some common misconceptions about life insurance. Number one is that it's too expensive. Life insurance is actually tailored to your budget. Even £5 a month can secure some coverage. It's better to have some protection than none at all. The second one is I'm too young to think about it. The younger you are, the cheaper it is. An 18-year-old can get $500,000 worth of life insurance for £20 a month, while a 48-year-old might pay £30 a month for just 90K cover. The third one is my employer provides life insurance. Well, that's great, but what happens if you change jobs? Besides, employer life insurance typically covers 2 to 4 times your salary, which is rarely enough. Number four is I'll get it when I'm older and have more money. Unfortunately, by then it might be too late. Your health could change, which could make you uninsurable or significantly increase your premiums. Number five is I have savings so my family will be fine. Don't get me wrong, savings are important, but life insurance provides your family with a tax-free lump sum, which is typically larger than most people's savings. So there you have it, the complete guide to life insurance in the UK for 2025. So let's recap. Number one, life insurance is essential if you have a mortgage, dependents, or you're the main breadwinner. Number two, term life insurance is the most affordable for most people. Number three, calculate your coverage based on your debts and your family's needs. Number four, get insured as young and healthy as possible for the best rates. And number five, use life insurance as a part of your wealth building strategy. Remember, the question isn't whether you can afford life insurance. It's whether your family can afford for you to not have it. The difference between my family struggling after my dad passed away and my colleague receiving a 126K inheritance came down to one simple decision: life insurance. If you found this video helpful, hit that like button and subscribe for more financial education that actually makes sense. But before you leave, Here's the most important part. If you're ready to protect your family's future and ensure that they're taken care of no matter what happens, click the link below to book a free 30 to 45-minute consultation with me. I'll help you understand exactly what coverage you need, provide the best policy available to you in the market, and put together a simple, affordable plan that gives you peace of mind. Don't wait until it's too late. Book your call now and take the first step towards securing your family's financial future. And remember, don't die for free.